Hello everyone and welcome back to another episode brought to you by Moose Investment Research. My name is Mahmood Bir Baksh and I'm the founder and director of Moose Investments based in Ontario, Canada. Today I'm going to be discussing a special situation you might have heard of or might be considering to invest in or have invested in already. The situation that I'm talking about is Saba Capital Management, which is a New York-based activist fund, making an aggressive move and taking a large position in ASA Gold and Precious Metals Limited. Now, ASA is another fund or a passive foreign investment company based in Bermuda for US federal income tax purposes. Now, ASA is a closed-ended fund which is managed by MERK Investments, which is also based in the US. Now, the purpose of this quick and brief video is to bring the facts to you so that you are not misled if you have invested already or planning to invest in ASA fund. Now, the reason I say that because there's a lot of push and information from both sides out there in public. So first off, let's discuss what makes this situation unique and the opportunity here for investors. So ASA, which has a ticker ASA, traded on New York Stock Exchange, has historically been trading at less than its net asset value. So if you look at ASA and its price today, it's trading at slightly over $15 per share. And its net asset value is slightly over 17, thus representing a discount of 11 to 12%. Now, over the last 1 year, it was also trading at slightly over 13 per share, offering a discount of more than 17%. And this is exactly what made it attractive for Saba Capital Management, which is why they started accumulating shares of ASA last year in 2023. When we look at their position today in ASA, they own close to 17% of the fund. So by the end of 2023, they had acquired about 2.3 or 2.4 million shares of ASA. Now ASA has around 40 million shares authorized. Out of that, close to 20 million shares are outstanding today. Now, obviously, Saba Capital wants to take advantage of this discount between the share price of ASA compared to its NAV. They started accumulating when the share price of ASA was around $13 per share, which was obviously last year in 2023. Now, as a response to this hostile and aggressive attempt to take over, the fund manager of ASA, which is MERK Investments, has actually adopted a poison pill strategy of rights issue, which was in Jan 2024. Now, this shareholder rights plan is basically to restrict Saba Capital from acquiring more shares. So the rights plan, which was adopted by the end of December 2023 or early Jan 2024, has a limited duration, expiring by the end of April on 29th of this year. Now, whether this was a good strategy or not by ASA's fund manager or its board of directors, we're going to come back to that later. But before that, let's look at ASA's performance over the last 1 year. Now, ASA is being managed by MERK Investments since 2019, and their performance has been abysmal since then. So the fund, for most of its part, has been trading for less than its NAV. So ASA's performance by the end of November 2023 has actually lagged the gold miners index by close to 300 basis points. So ASA's performance is basically measured against ARCA Gold Miners Index, which is also listed on New York Stock Exchange. Now, this is because the fund actually invests in a small cap gold mining companies. It runs a highly concentrated portfolio, primarily invested in small mining companies in Canada. So it has more than 70% of its funds invested in Canada and rest of it in other places like Australia, the US, or in the UK. So over the last 1 year, the fund has actually returned 7.5% compared to 10.6% for the index. Now, when we look at its financials for 2023, one of the main reasons for its lagging performance is its advisory or the management fee. So all the investment income, which was close to 2.4 million that it earned, had actually gone to the advisors as their fee. Now, when we look at the share price of ASA over the last 2 to 3 years, it hasn't really moved much. It remained somewhere between 18 to 25 per share, which I think, in my opinion, is not reflective of the gold prices. Now, the gold price for the same period in the last 2 to 3 years has actually appreciated by more than 15%. And the companies that the fund invests in are all gold mining companies involved in the exploration and production of gold. So their prices are dependent on the price of gold. Therefore, I don't think there's any justification for this underperformance. Yet, when you read the fund's 2023 annual report, the management, which is MERK Investments, actually attribute this underperformance to adverse movement of interest rates, which I don't think should be the case. Now, I do understand that the interest rates actually affect the price of gold. But then if the gold prices had actually appreciated, then the fund should have matched that kind of performance, in my opinion. So even if it's got to do with interest rates, even today we are not clear whether the interest rates would rise or will be decreased by the Fed. There still seems to be a lot of uncertainty out there. And even today, the gold prices have not actually depreciated and they keep increasing and going up. Yet the share price of ASA has actually declined from its peak of 23 something to slightly over 15 per share today. Now, one of the reasons for this decline could be that the existing shareholders might be exiting their positions after they announced their rights plan in late December last year. Now, in my opinion, I feel that this rights plan is adopted in self-interest by MERK Investments and its managers and directors. And they have done this to protect their own advisory and management fees that I mentioned earlier, which obviously pays their salaries. But when you read their commentary in the annual report or the proxy statement, they state otherwise. They claim that they have taken this initiative in shareholders' interest, which I don't think is the case. That is because why would you dilute their interest by issuing more shares? Now, obviously, the rights plan is to issue more shares to those holding the shares since Jan 12 of 2024. Should Saba Capital increase their ownership by buying more shares during this period? So if they try to increase their ownership by another 0.25%, the company will issue one additional share against each share outstanding or owned by existing shareholders. Now this obviously dilutes the existing shareholders' ownership in the fund. Now the fund already pays a much lower dividend, which is around 2 cents per annum. And therefore, the claim made by MERK Investments in their proxy form is not justified, what I think. They claim that the rights plan would actually adequately compensate the existing shareholders, whereas I think it's going to do the contrary. Now, these additional shares will be priced at $1, but should the rights plan is triggered, that is, if Saba tries to buy more shares, the existing shareholders may not have the funds to buy these additional shares which will be issued under the plan. And why would they do this when they are already in a loss? We have seen that the fund has not really performed well. And what is the guarantee that the share price for the fund will not fall any further? What if the Fed decides to cut interest rates, which is pretty much expected this year, and then we see a decline in gold prices, which will lead to a further decline in the share price of the fund. Therefore, I don't think it's in the best interest of the existing shareholders. Now, obviously, I'm not a shareholder in ASA fund. Just want to make my position very clear here that me personally or the company that I represent do not have any position in ASA fund or MERK Investments or Saba Capital. But because we have come across this situation, which is why I think it's important to bring facts to the table so that the investors are not misled by conflicting statements made by all the parties involved. Therefore, you must know that our position is unbiased in this situation and our interest is limited to just the research and analysis that we are involved in. Having said that, that doesn't mean me personally or the company or any of its directors or managers will not initiate a position in ASA fund or any other funds being discussed here. Now going back, Saba Capital, because it already has a large stake in ASA fund, has initiated litigations against this discriminatory rights plan or the poison pill against MERK Investments and its directors. So it filed a lawsuit on Jan 31st this year in New York, seeking to repeal the rights plan under the Investment Company Act of 1940. So according to Saba Capital in this litigation, they allege that the rights plan actually violates Section 18D of the Investment Company Act of 1940. Now, in my opinion, and I might be wrong, you obviously have to do your own due diligence and work. I feel that it's a fair claim by Saba Capital. I feel that they should not be discriminated against, being one of the largest shareholders holding close to 17% ownership of ASA fund. Therefore, Saba Capital has the right to demand that these restrictions be removed, and they should be able to acquire more shares and take control of the fund and appoint their own directors so that the fund is steered in the right direction for its existing shareholders as a measure to protect themselves and to safeguard their interests. Now, obviously, MERK Investments and its directors and managers have been aggressively buying shares of the fund themselves. So there's a lot of insider trading that is taking place. Between December and January this year, some of the managers and directors actually bought more than $700,000 worth of shares of the fund. Now here's the question, what should you be doing as an existing shareholder if you bought the shares before 12th January 2024? So if MERK Investments win the litigations, you obviously are entitled to one additional share of $1 each against each share held. You will obviously end up having more shares. Now, because these additional shares under the rights plan would dilute these existing shareholders' ownership, which means the number of shares will increase, This will cause the share price of the fund to decline. You still don't have to worry much. That is because you have MERK Investments and its managers and directors who would be owning these shares alongside you. So let's say if there is a significant drop in the price of ASA fund, it may attract other activist investors who might be interested to acquire the fund. But then MERK Investments would be in a better position to seek an appropriate price for its shareholders and for themselves, which means you might be able to get a premium, which obviously result in achieving a higher price than what it's going to be trading at the time. This litigation also serves as a wake-up call for the management of MERK Investment, and it will give them the opportunity to course correct and improve their performance. They can also reduce their management advisory fees, which will obviously increase the distributions to shareholders. Now obviously Saba Capital will continue to be the shareholders. They'll keep putting more and more pressure on the management for higher dividends or perhaps share buybacks in order to narrow the gap between its NAV and the price of the fund. So obviously all this could play out in your favor if you're an existing shareholder and you become part of the rights plan and you decide to continue to hold the fund. Now let's say that if Saba Capital wins the litigations, again as an existing shareholder or a new shareholder, you would still be at an advantage. Now obviously when they win, they'll be able to appoint their own directors who will make sure that the dividends are increased, and they can also take some other measures, for example, buying back shares. Or even if they decide to sell some of the assets, they might be able to sell it at a better price. They can change the strategy of the fund and take on additional leverage, which may not be bad for the fund if it's limited, which may help in improving the fund's performance. Now, one of the claims made by MERK Investments stating that most of the funds which are similar to this are traded at less than NAV. Therefore, Saba Capital will ensure that the gap between the price and NAV is narrowed down or eliminated so that it doesn't attract any new predators in future. So when that gap is eliminated, you can expect 12 to 15% gain, depending on your entry point of the price you bought it at. That this is not to say, or must not be misconstrued, that you should or should not be investing in this fund. You obviously have to do your own due diligence, whether you should be holding or should be investing or not investing in ASA fund. So all in all, there's a possibility of a win-win situation for both existing as well as new investors. So in my opinion, I think Saba Capital has 70-30 odds in their favor, which means 70% chance of them being able to win these litigations. That is because they know what they're doing. In recent past, they've been able to win similar litigations against BlackRock, Eaton, and Nuveen. Now obviously BlackRock being $1 trillion fund, yet they have been able to win because they were all in violation of the Investment Company Act of 1940. I think Saba Capital, once it appoints its own directors, would be able to eliminate this discount between its price and NAV to take full advantage of it and benefit its shareholders. That is because their interests are aligned, which is why I think they have a better chance than MERK Investment of winning these litigations. Therefore, you have to form your own opinion whether you want to be on MERK Investment side or you want to be with Saba Capital on this. Either way, as I said, this could be a win-win situation for any shareholder or investor. So one of the risks, obviously there's a correlation between the price of gold and interest rates. Should the Fed decide to increase interest rates, this will help the gold prices to move up, which will also cause the price of the fund to appreciate. And should the Fed decide to reduce interest rates, which would cause the price for gold to fall, leading to a fall in the price of the fund. Because of a decline in prices of underlying securities, which are involved in gold mining. But because you bought at less than NAV, there's high likelihood that you are somewhat protected. So that's it from me for today. Hope you have gained some insights. Thanks for listening to me. So make sure you let me know what you think about this situation. Leave your comments or feedback under this video, as I intend to get a diverse view on this. And most importantly, to make sure that the shareholders and investors are not misled. So your views, your opinion or feedback actually counts, especially if you have come across a similar situation before. So bye for now, take care and stay safe.